Good morning. It's me, Tom Altieri, your New Jersey mortgage guy. It's the 7th of February in the year 2020, and we're getting there pretty soon. Winter will be over. I'm wishful thinking. Hey, this is about understanding mortgage rates. Why you see a low rate, posted out there, and you can't get that rate maybe. But here, this maybe will clarify things for you. Rates are determined by risk factors. Risk factor number one is loan to value. So if you're putting down, we're going to use purchase as an example for this. You're putting down 5%, right? Or you're putting down 20%. The risk is higher on the 5% down. So the rate is going to be a little bit higher. That's how that works. Credit. If you have a 740 credit score, the risk is less than somebody that has a 680 or 640 credit score. So the rate is going to be better. So add the two factors together, 20% down, 740 credit score, a lot better than somebody with 5% down and a 680 credit score or a 640 credit score. In a refinance, cash out is a higher risk than just a rate and term. If you're just going to change your rate and term, you owe 200,000, you're borrowing 200,000, you want to lower your rate or go to a 15 or 20 year, that's going to be better than you have 200,000 and you can borrow another 50,000. That's going to cost you a little bit higher in rate. Property type. So if you have a single family property, it's a little bit better than a condo. Condo is a little bit higher risk. Loan size. In some lenders, loan size matters. We actually have some lenders that don't make that adjustment, but some lenders will make an adjustment if your loan is under 200,000. Some lenders will make an adjustment if you're in New Jersey or in New York. State matters. So the last thing I want to cover about rates is the difference between lender paid PMI and borrower paid PMI. Lender paid PMI, when somebody says, you can go 5% down, no PMI, well, they adjust that PMI in your mortgage rate. So like if your mortgage rate was supposed to be 3.75% and you had lender paid PI or putting 5% down, it might be 4 or 4.25%, right? So they're going to add to the rate. Borrower PMI is determined by, and so is lender paid PMI. But again, the same situation. If it's loan to value and credit. If you have good credit and a higher loan to value, so 5% down, your PMI will be a little higher. 10% down, it'll be a little lower. 15% down, it'll be a little lower. Credit score 680, it'll be a little higher. Credit score 720, a little lower. I hope this clarifies things. Anyway, while I have you on here, New Jersey Mortgage Service here, we're faster, we're easier, and we're cheaper. And rates are phenomenal right now. Today, rates are very good again. It's a great time to refinance it to maybe a lower term. You could probably go into a 20-year today for the same price. If you have a rate that's a little bit above 4%, 4.5%, you could probably go into a 20-year today and get the same rate, have the same payment as you're paying right now. So if you're in the 27th, 28th, 29th year, you may want to consider refinancing. I'm always accessible. 732-239-1642. Give me a call. Thanks.